Hello, this is Tyler here with Securities Trading. I'm going to talk about the PDT rule and how you can overcome this and how you can get through this obstacle. Now, firstly, understand this PDT policy only applies to U.S. people. Anyone that's a U.S. citizen has a U.S. based brokerage account. And it's important to understand that this pattern day trader is a designation given to traders who day trade at least 4 or more times during a period of 5 business days. And their day trading must also exceed 6% of their total trading activity for the same 5-day period. If you do not meet this requirement, the brokerage firm you're associated with can recognize you as a day trader. Thus, a pattern day trader is a day trader with an additional requirement on the number of day trades that must be used to qualify. And then this is where the PDT rule comes in place. Implemented in 2001, the PDT rule helps to protect new traders. Unfortunately, though, it often hurts traders with more experience that don't have big accounts. And once a day trader is deemed a pattern day trader, the financial regulatory body FINRA, FINRA, requires you to have a minimum balance of $25,000 in your brokerage account at all times. And it also states that the minimum equity that must be maintained before day trading activities can commence is $25,000. In the moment that it falls below this, the pattern day trader will have to abstain from any day trades until this minimum amount has been met. And this is a pain for many people. Anyone who has been a day trader or who currently is, who's trying to, especially for younger traders who don't have a lot of money in their account, this is a huge obstacle. And unfortunately, many of us have had to deal with this. I myself have gone through this period multiple times, and I know just how frustrating it can be. I know being at like 23,000 mark, working my way from 10,000 to 23,000, then falling back again in the past, and then having to start all over again. It's such a pain. And unfortunately, this is just what it is if you're a U.S. citizen. If you're a Canadian, if you're from Australia, from Germany, anywhere else, you typically don't have to deal with this. And you could have $3,000 in your account and make as many trades as you want. And this is just an annoying policy that us U.S. people have to deal with. So here's some tips though to get around this. Firstly, simply restrict the number of trades. Make sure that you don't make more than 3 round-trip trades per week. Round trip meaning buy and sell in the same day. That's first thing. Another thing many people do now, especially with more broker options, is open multiple accounts with different brokers. And there's many accounts now, companies, you can start with $100, $500 and just split your funds this way. And then perhaps if you have 3 accounts, you could make more than a full round trip trade a day. You could possibly make 2 trades a day. Now, the next thing is to consider swing trading. This is probably the most optimal way to get around this, especially if you don't have a lot of funds. Many brokers also give you leverage. Remember that. Oftentimes, the normal amount of leverage you get is 2 times whatever your balance is at. So if you have 2,000, you get 4,000 of buying power. If you have 5,000, you get 10,000 of buying power. If you have $10,000, you get $20,000 of buying power. And if you combine this with swing trading, you can work your account up very quickly, especially if you pick stocks that are making some serious moves in a single week. You could get out of this PDT situation even with a $10,000 or $15,000 account within a week. Even a $5,000 account within a couple weeks, you could be past this and on your way. And also remember this, is that when you work past 5,000, say to 10,000 and then 15,000, you're getting that much more leverage on your account. So it's actually kind of easier in some ways, because once you get to a certain point, you have much more momentum, especially if you're picking the right stocks to trade. It gets much easier to make a couple $1,000s in a day with say a $15,000 or $20,000 account than say a $2,000 account. And this leverage is a big thing here. Just realize, so if you use leverage, use it wisely and be very careful, especially when your account gets bigger. If you're say at 22,000, you get $44,000 of buying power. You can fall back very quickly. Even a 10% loss push you back down for at least $4,000. So keep that in mind if you are using leverage. The next thing is to choose a foreign broker. This is another great option here. There's not a lot of options here though, especially trustworthy brokers. One is CMEG, that's based in the Caribbean. There's a couple others smaller that are fairly well known. Just note that these kind of brokers often have very high fees. They have monthly fees that you have to pay, and so if you trade with this option, you have to make sure your trades are very profitable and you're not making too many trades, especially when your account is small. You may have like $120 monthly fee, and then per trade it might be at least $40. So yeah, if you're making $500, $1,000 profits, well worth it. If you're only making $50 profits or $100, it's really going to eat into your money. And one more thing to consider is just trade in a different market. Perhaps if you're, cryptos, Forex, there's other kinds of markets that don't have these policies. Maybe you can raise funds quicker trading those other options and then transferring the money back into your cash broker. This is another fine way. There is another way also. If you possibly have family or friends where you guys could pool money, or these people trust you to pull money together, maybe you can get a few thousand here, a few thousand there. In no time, you could be at 25,000, and then simply carry out your trading, make some money, possibly then return the money these people gave you, and then give them interest back, or continue trading for these people if you have an agreement in place. But this could very well work. Just note that if you do this, make sure you are very confident in your trading abilities, because you do not want to lose these people's money. And like I said, probably best thing is make enough profit to cover your account, and then at a certain point return the funds with interest, and this is something else you could do. There's different scenarios here, but it's also important to note that trading like penny stocks, microcap stocks, well, very risky and challenging, much more likely to grow your account a lot faster than trading like large cap stocks like Microsoft, Tesla, stocks like this. You're probably going to raise money a lot quicker if you're willing to take risks with small cap stocks. It's just the name of the game. Also note that don't feel like once you reach like 22, 24,000, if you're really close to that mark, firstly, see if you have some money in a different account you can just transfer over in a bank account. Maybe there's someone who will lend you some money. But when you reach that amount, very close, you don't need to make monster trades to get to that 25. You maybe should just actually lower it and just make $5,000 trades or $10,000. Even if you're just 1,000, 2,000 shy, because going back to what I said, you make say $40,000 trade with all the buying power you'll have, you could take a big loss and then go back down a few $1,000s from that starting point, and it can get really frustrating. You could just feel like a hamster on a wheel here. So you really want to be strategic when you're very close to that amount, and don't get too overwhelmed. When you're really close to, you just have to think of it like you did when you were at 5 or 10,000. Just be patient, focus on consistency and good trades, and don't just aim for home runs. Focus on base hits here, and you'll get past this PDT policy. And also, going through this will make you a very good trader. It will really train you. It will train your eye. your skill levels will probably improve a lot, and actually long term make you a very successful trader, because you'll know exactly what a good setup should look like. You'll know when to cut losses when you need to, and to focus especially on good trades. So give me your feedback here, and thank you.